Welcome to the Apartment Investor Show, where we help you get smart and invest smarter in multifamily real estate. I'm your host, JC Castillo, founder and managing principal of the Multifamily Property Group. And joining me, as always, my co-pilot, Mr. Paul Peebles, national underwriter for Old Capital Lending. Paulie, how are you doing today?
Doing great. A beautiful fall day here in the Dallas-Fort Worth area. And you're selling a property, JC. You usually buy properties, you never sell them. So how did that come about?
Well, I tell you, Paul, it's good to be a seller in this market. It's a red hot market, especially in Texas, where a lot of people are wanting to put their capital to work. So, it's been fun to be a seller instead of being a buyer. The guest that we have on the show today, Paul, can probably tell you a little bit about the whole brokerage piece of our business. But I'm actually more excited to have him on to talk about a subject that might be near and dear to a lot of people out there listening to our show. In fact, this gentleman that we're going to have on the show, he actually did a post on LinkedIn. So get this, Paul, he posted on LinkedIn and he immediately got me to call him on his cell phone and ask him if it was really true what I saw on his post. And in fact, it is true. He's going to tell you about it today. Today, we are going to talk about how you can possibly save big dollars using solar at your apartment property. Now, Paulie, I know, and as everybody out there knows, that people are doing solar on single family homes all day. And I've been doing this for 14 years, and I hadn't really heard of a real success story with somebody who had applied solar to multifamily and made the numbers work. As you know, solar can be pretty expensive. So as soon as I heard about somebody who had successfully done that, well, I figured we better get him on the show and talk about that, Paul.
So that's great. Because, the expense line item is so great on an operating statement is that everybody is trying to get that off of, say, the landlord's back and put it on to the tenant's back. But what's even better is that if you can find and they have the ability to have solar come in and have solar provide the energy piece of the deal, it really is a win-win scenario. Win-win for the tenant, win-win for the landlord, and definitely win-win for just the general economy. We want these properties to be very efficient these days, and solar is definitely the way to get it done. So you're right. I mean, we see it in California, we see it in Florida, but we don't usually see it here in the Midwest or in especially in Texas. And so our guest today is Todd Franks, and Todd and I have known each other for a long period of time. Todd is the managing broker for one of the largest multifamily listing companies here in Texas, Greystone, and he does a great job. But one of the things that he does, he wears a separate hat. So not only does he sell multifamily properties, but he happens just to own a couple multifamily properties. And so we certainly like that because there's a lot of brokers out there that don't really know how to operate these properties because they just read stuff in a magazine and they kind of find out how other people do it. But Todd's one of those guys who actually owns multifamily property. He's owned it a long time in the past, and he's a very good operator. So I'm anxious to listen a little bit about what Todd has done to kind of save that very expensive line item of energy costs, the utility cost, and kind of figure out what it is. So I'd like to welcome Todd Franks to our program. So Todd, thanks for hanging out with us.
Hey, thanks for having me, guys. Really appreciate the opportunity and excited to talk about it. Kind of feel like the guy from the old Rogaine commercials or something where they're bald. And, not only am I the CEO, I'm a customer too. And with that intro. So,
well, Paul, Todd and I go way back as well. I mean, I've known Todd almost as long as I've been doing apartment deals. And so he truly is not only a great broker, but he's also an expert owner. So, I mean, Todd, let's get right into it, right? I mean, is it actually possible to make solar work at a multifamily property?
For sure. What obviously would, helps with my properties is that they are all bills paid properties. So the landlord is responsible for, water, gas, and electric. They're master metered properties. So if for example, you were individually metered and the, tenants were responsible for their electricity, there is a way to make that work as well. Perhaps you could just do enough solar for the house lights and, the common area electric, but really, really works well for all bills paid property. The idea stems from the hotel business. I don't know if y'all have noticed, but I did, driving down interstates. You're starting to see a lot of solar panels on hotels and motels. And that's kind of the genesis of this. Is actually I had a client sold their property for them over in Fort Worth, and they were going to put solar on it. We sold the property for them before they ever had the opportunity. They did have a proposal, but they also owned a lot of hotels and they had done it. And so kind of at the celebratory lunch, he told me, about the proposal. And I said, hey, that sounds interesting. Would you hook me up with the company? And introduced me to Namel and Nadia at Universal Solar, and spoke with them for a while. They asked me a series of questions, then sent them over my electric bills, and they came out, took some measurements, and came up with a proposal. I could share that proposal, with you now if you like.
Let's before we do that, let's jump into it. So, all right. So the key thing I think you said is that if it's a master metered property, which a lot of these older properties, if we're talking like 1960s and 70s vintage, are going to be in fact master metered. So if you're out there and you've got a master metered property, this is sort of what I would say the right down the middle of the fairway type of an application for completely doing solar at that property. Correct?
Correct.
Okay. Now, if you're going to put solar on a multifamily property, is there any sort of limitations with how much square footage you've got on your roof to be able to maximize the solar generating capability, or how does that all work?
Correct. Yes, there is. Actually, and believe it or not, it's everything old is new again. A flat roof would be better than a pitched roof.
Wow.
You could, get more sunlight on it. It has more sun exposure than a pitched roof. Obviously, on a pitched roof, after a certain time of day, you're going to have shade hit it. And I had the properties that I've done, I can kind of show you on the diagram. On the pitched roof property, the panels are only on, one side and really kind of in the front and on one side. The flat roof, they coat the entire thing with panels.
Okay, yeah, let's check it out. Why don't we go through this deck. Now, for the people that listen to us on our podcast, we'll try to verbally talk you through some of the things that we're going over, but you can always hop over to YouTube and Google our show, Apartment Investor Show, and you can actually see the video stream of this podcast as well.
All right. And let me know when you can see the proposal.
We got it.
Beautiful. All right. Sorry about that. I scrolled down to the bottom. So this was the proposal that they came up with. I have a couple of properties. They're pretty much right across the street from each other. Central Dallas, and they're now terming as either West Dallas or North Oak Cliff. So, very urban core area. The first page, they just go into a little bit about the history of the company and, why to do it and, why they're a credible company. I really just asked, hey, how long have you been in business? Knowing if you know anything about roofs, that's the first question you want to ask your roofing company, because a lot of them come in and out of business and, no one's there to honor a warranty, and, that can be a real problem. So they'd been in business for 10 years, and I thought that was a pretty good run. So, that gave me a little bit of confidence there. Here's the smaller first property. This one is just a 22 unit. And you can see it's the pitched roof and the panels. We just have on, the front and these two sides. So, and actually we didn't end up doing them on the front of one of the buildings, either this one or this one, but, it wasn't necessary at the end of the day. But, the sides are completely coated with panels. You can see, they say the expected production is about 76,000 kilowatts. And this is the big thing that you want to pay attention to. What is that going to offset your energy percentage? So it should reduce my energy cost by about 35%. So you're not going to cover the complete cost of your electric. But it's a great return on the investment, which is the important part.
Building number one that you just showed us, 20 something unit property with pitch roof, which has a little bit more limited capability in terms of the amount of solar panels, is going to give you a 35% savings in your monthly electrical bills across the whole property.
Correct.
Gotcha.
And you'll see the difference immediately next on the flat roof. So here's the flat roof property. This building down here, it's not completely in the photo, but it is a pitched. I guess they were two properties at one point in time. We have panels on one of the pitched roofs, and then this is the rest. They did end up actually coating this building as well, even though it doesn't show it in this graphic. That's all this is a graphic before it was ever done. But look at the offset versus the pitched roof, 61% offset in energy usage. So that just kind of shows you, you can put a lot of panels on there. They'll pitch the panels a little bit based on the fact that that's going to maximize the sun exposure on the flat roof, but it just gives them a lot more latitude to, move things around and play with it to maximize the energy production. This property we're, obviously at about 200,000 kilowatts. So I told them that's a sucker's amount. It needs to produce 1.21 gigawatts, but they wouldn't do
it. Absolutely. For all those people that love Back to the Future. So now, Todd, the question is, I think that everybody's out there is going to want to know is, how much does this cost, and what's the return on your investment? Is it actually worth it to spend the money to put this stuff into your property to save between 30 to 60% of your electrical bill?
For sure. I'll walk you through that, and this is the start of it. Right here, just something simple to use. It's in graphic form, and it might be a little hard to read on your side. It's hard to read on my side. So this is the red line. Here, the bright red is pre-solar, and then the gray is post-solar. So the gray is layered in there. You can see how much of the energy total usage is being covered by the solar. So in this case, they say, your yearly electric bill pre-solar, $15,000. This is the smaller property, the 22 unit. After, your electric bill is going to be about $10,000 a year. So, you can see that's $5,500 savings per year on the electric bill. Again, this is a smaller property. So, your break-even point is about 1.1 years on this one. That's 94% return, and it's the lifetime return is, you can see, fantastic. They say 2,700% return, but, I'll believe it when I see it. It's only been in place for about a month now. So, but you can monitor it daily. There is a dashboard that you can get on. You can see the electric production, at the moment. You can see exactly how much electricity it's producing at any given second. And then it logs it all. And you can see your energy production over time. You can break it down to a daily basis if you want. And there's some things that we still have to do to up the production. Like I have some tree trimming to do around the properties. So that's something, you maybe want to budget a little bit for, but not a huge expense. The cool part is I was a bit of a science geek. I graduated from Michigan State University from the College of Natural Science. I was pre-med, but always kind of a science geek. And, from Michigan, it's a bit of a green state. It's a little environmentally friendly up there. We have deposits on our bottles and cans of 10 cents, so people don't just throw them out. So it's just kind of the culture up there. So, this is the feel-good stuff of, hey, it's equivalent to planting 1,400 trees every year and, replacing 13.88 cars, with hybrid cars and that sort of thing. So that's kind of a neat deal. Now, this is the other property. You can see the offset's a whole lot better here. Yearly electric bill on this property is about $23,000. After solar, it should be about $8,900. $14,000 savings a year, which is really great. So same deal here. The break-even point, the percentages are about the same, and the equivalent of planting 35 or 3,600 trees, and all the same stats, the feel good stuff here. And here's the cost. If you want me to go
here's where we get down to the numbers and cents.
Yeah. So system cost seems expensive out of the gate. It is sticker shock. So, when I went in and met with Universal Solar and they laid this out, I'm like, I'm not doing this. When I saw the top line, no, this isn't going to work.
Yeah. So let's read this number out just so these listeners out here can hear it on the podcast. So, what are we looking at on a system cost?
Total system cost $725,200.
Woo! And so that's for how many units worth of two properties?
That is 74 units.
Okay, so 74 units, 72,000. So you're talking $10,000 a unit, right?
Yes, sir.
Okay, yeah. So that doesn't make sense off the bat, but it gets a little better. So why don't you go forward with that?
Yeah, but if you think about it, that would be approximately the cost to converting it to individual meters and individual HVAC. It's about $10,000 a unit. A lot of people do that. It is justified in some markets and on some properties. I've seen properties on the market right now where they're suggesting, we've sold one up in Denton earlier in the year where they're, doing that. And I can tell you that's about the cost. I've had several clients do it. What's great about solar is you don't have to do that. You get a tax credit. Out of the $725,000, you get a tax credit of $217,560. So you're like, okay, we cut it down to about, $500,000 now. I've got to come out for this thing.
Now, is that tax credit like a physical rebate that goes right into your pocket at the installation of it, or like what do you mean by tax credit?
Tax credit, I just finished filing my taxes, and thank goodness. That's always fun to do every year. But, it's a dollar for dollar credit against your tax liability is what a tax credit is. So every dollar you owe in taxes, now you have a tax credit. So and it'll carry forward for a long time. I mean, forever, until you use it all. So if I could only use, a portion of that, then, I can not pay taxes with these tax credits over the number of years it takes to go through them. So it is something that you get when you file your taxes after you install it.
So it's almost like bonus depreciation, where when you buy a property, you do a cost seg study and you sort of accelerate all of the depreciation for, short-term, property on your complex, you get to immediately realize it. So this is another way of having sort of this, call it phantom loss that you can apply towards your earned income.
Yeah, it's a little different than that. This also allows for that. So we'll skip down to, or I'll get there. You can depreciate these two, in a year, and it adds up quickly. But then you have this environmental attribute incentive. Now, this is something the solar company covers. This is not out of pocket cost. They go out and they basically sell the carbon credits, and they pay for $410,000 worth of the $725. So, boom, immediately you're down to, $315,000 that you're going to be out of pocket to install the system. So that's the big savings right there. When they got to that point in the proposal, I'm like, okay, this is worth sticking around for. Let's talk through this. Tax credits come in the future. The depreciation, same with your taxes. You're going to depreciate the panels. I don't know if anyone has any familiarity with oil and gas investments, but all the cost up front on an energy investment can be depreciated 100% the first year. So depreciation of the panels, assuming you're in the 30% tax bracket, that's $62,000 of savings in taxes as well. So at the end of the day, you have to stroke a check for $315,462, or I had to. Someone has to. So if you want to look at it as a
which
percentage,
is basically the $725,000 system cost minus the environmental attribute incentive that the solar company rebates right off the top for you, and then so that's what you've got left over then.
Yeah. So really, what the system cost total, I just crunched the numbers real quick here, is, that's 43.45% of the total system cost that you're going to have to come out of pocket. After all those incentives get paid back, your net system cost, after you take into account the tax credits and the depreciation, it's about $36,000, $35,897.40 is what the system's actually costing you. Now, again, let's go back up in the approximate savings per year. I could show you, we go back up here. I said, it's $14,088 on the flat roof properties, $5,532 on the pitched roof properties. That's a total of $19,620 a year in savings on a $36,000 investment.
Amazing.
So that's less than a 2-year return on your investment. And, I know a lot of investors. I know, we have to, as brokers, investigate and sell the value add components of every building. In any business that you sell, where are the inefficiencies? What are they not doing that they could be doing? And, apartments have traded heavily post-recession here in Dallas-Fort Worth, and a lot of people have, made the businesses very, very efficient. This is something that I haven't seen really tapped into yet. And so, having the science background, being a broker, all those things, that kind of line up. I'm like, I get to do my own little science experiment here, at my property. I don't have, really, I'm fortunate to not have partners to answer to, so I can do the experiment, whether it fails or not. And then, once it's proven up, here's an actual case study. I've done it, and it was the same when I bought the apartments. They were very, very dilapidated, heavy value add. And, we had to invest more money into the properties than we paid for them.
All right, Todd. So, listen, we talked about sort of the goodness of solar, and it was great that you went through the numbers. And this does seem to be something that is very legitimate. Is there any other sorts of technologies that you have incorporated into sort of your electrical play at your properties that you might want to talk about?
Yeah, that's a good question, actually. We have implemented something that was really unique before we did the solar, and it kind of led into it a little bit, was I have a client, and before they were a client, they approached me because they knew I was a broker and thought I could get the word out there that they wanted to be the water save co for electricity. And for those of you who are not familiar with it, water save co, they go in and, they do a water audit on your property, and they basically say, okay, if you replace the toilets with these toilets and you put in aerators on all the sinks and replace the shower heads, we're going to save you X amount of money a year. And actually the payback on that is usually around, 2.5, 3 years or so, just depending on the property and what you do and the program you sign up for. So that's a good energy saving source as well. But these guys had a unique idea, and it's pretty simple. But they're installing smart thermostats in the unit. But what's different about it is, it's hooked up to a network at the property. And then, they provide you a dashboard. And you can go in at any time and look at the dashboard. And, one thing that really helps, especially with an all bills paid property, is, of course, you can set a ceiling and a floor for how high you want the temperature to go or how low. The tenant can then go in, though, and they can lower it if they're at night, before they go to bed or something. Let's say they want to get it down to 70 degrees instead of 72. They can lower it down to whatever they want, but it will reset, after several hours to that floor again. So they can't just, stick it down at 60 degrees, go to work, and, you're paying that electric bill all day, which I've seen many times happen in the industry.
Yeah.
Doing tours of clients at other people's properties. You walk in, you're like, whoa, it's a refrigerator in the middle of a 110 degree day.
That's right.
So this was kind of a unique idea. And What else it led into that was really neat is if you have a maintenance issue with your AC or not before it ever even happens. So you kind of, you're looking at this dashboard and it gives you one of those scatter dot graphs. And, they should all be in the same, kind of area of how much it's running. And if you see someone's out of line, you're thinking, oh, that person's using their air conditioning all the time. Hey, it might be just that their air filter needs to be changed. It might be that, something's wrong with, their particular, if you have an, individual HVAC, something's wrong with the exterior unit or something's wrong with the blower motor on the interior. But the cool part about it was like, you have some intel to go off of. Tenants never report if their unit's cool. They don't know that the AC is running all the time. They just know the unit's cool. And so you don't even know you have a problem. So, it kind of sends up a flag. Then the manager can send the maintenance man and say, hey, go check out unit 101. Something's going on with the AC. And they can do a little diagnosis and hopefully it saves money because, those things are just going to blow up by the time there's a problem and you're going to have to replace it. So, maybe it's just a small issue. And like I said, if it's replacing an air filter, that's a whole lot cheaper than replacing an AC unit. But, again, it's cool too from the angle of, hey, we don't want, a lot of times at an all bills paid property, people just act irresponsibly. They just leave their door open, AC or heat running, windows open. This has sensors for all that. It actually even has like a motion monitoring system. So it knows if anyone's in the unit or not. And so if, there's no motion in that unit or, you can set it to whatever you want, let's say 24 or 48 hours, it'll turn off the AC to that unit. And so, you don't have to run it at all, which is, that's a good energy savings as well.
So when you're the landlord and you're paying all the expenses, whether that's water or electricity, it can get very expensive for you. It becomes a large line item cost, and you need to find ways to protect your wallet. And I think Todd has given us some great ideas concerning trying to protect your wallet as much as possible. Solar was a little popular, is a very popular idea out in California, Florida, and some of these other areas. It was a little popular years ago in Texas with some tax implications, but now it sounds like it's coming back and it gives people an opportunity to maybe explore solar on their property, especially if it's an all bills paid property and you're the one who's paying the electric bill for it. And so I think Todd and his group has done a great job. Now, if I can just turn out for a second, Todd, and get your opinion. As you know, Todd is with Greystone, one of the largest multifamily listing brokerage companies in the United States, based out of Dallas here. Let me just pick your brain here for a second. How are things going in multifamily and sales and cap rates and things like that?
It's been a terrific year, believe it or not. I mean, obviously we had a slowdown there for a couple of months. March and April, kind of the world stopped and picked back up though. And, I think there was pent up demand. We put together a whole lot of off market deals. Everyone pulled their properties off the market, during COVID, which, that made sense. But then, what happened was, that allowed, there were still buyers interested in buying. They wanted to buy. There was just no product on the market. So we weren't really seeing a COVID discount for properties. It's been a good year. Sales have picked back up. I mean, we've closed 40 deals year to date. And that, if everything tracks and closes in the pipeline, we're getting kind of close to the end of the year here. We're more than halfway through October. And if everything tracks, we'll have a record year, knock on wood.
That's fantastic. And then cap rates, where are you seeing right now in areas of like Dallas, and bring me all the way down to say Waco or Killeen or some of these secondary, tertiary markets?
Yeah. So, I mean, core Dallas, A-class stuff, we're seeing as low as 4.5. I mean, the general cap rate range, I'd say on a B-class middle market deal, you'll see them range between 5.5. Going out to the secondary, tertiary markets, you could get lucky and maybe find a 7 cap. out in some of those markets. But generally speaking, you're going to be, I'd say 6.25 to 6.75 range.
The people that are buying these properties that you're selling these properties to, are they Dallas people? Are they people from all across the United States? Give me an idea, if you could put it in a box, or maybe you can't put it in a box, of it. Who's buying these properties?
It's a good question. It did shift this year with COVID, and the inability to travel, the lack of travel out there. So that did shift it back to Texas investors for a period of time. But as of recently, probably the last 2-3 months, we have seen the influx of out-of-state buyers ramp back up again. And, we're touring several out-of-state clients through properties this week. We're seeing people just come in and, even from a speculative point of they're just starting out in the market and, they want to buy properties. They don't own anything here yet. And they're just coming for a visit to get a feel for the market and, look at some deals. So I think, it's getting back to normal, I guess.
If people wanted to get a hold of you and kind of learn a little bit about what you guys have on the market right now, what's the best way for them to get a hold of Todd Franks and his crew over at Greystone?
You please shoot me an email. It's pretty simple. It's my name, Todd, TODD, Franks, FRANKS, at Greystone, GREYSTONE, and ISG, like Indigo Sam Green.com. You can also give me a call anytime. Direct dial is 972-916-9397.
If this is your first purchase or your fifth purchase, you want to talk with Todd and his group over at Greystone. They do a great job. JC, what do you guys do at Multifamily Group?
At Multifamily Group, well, Paul, for the last 14 years or so, we've really focused on helping investors make smart multifamily investment decisions. I mean, Paul, we talk about all the time. If you want to invest in the stock market, that's really not something that we can help you out with. If you're looking to invest in multifamily, you're getting started, you've got some questions. That's something we really know a lot about. And so if you are out there and you've got any questions about multifamily, you can go to our website. It's multifamilypropertygroup.com. Again, multifamilypropertygroup.com. And you can literally go to the homepage and hit the free consultation button, and you can schedule your own 5-minute Zoom intro with myself. And I'd be happy to see how we can help you out, Paulie.
Yeah, you guys have done a great job here in the Dallas-Fort Worth area, even though you are Bay Area guys, but you've been in the marketplace for over 15 years. You've seen difficult cycles, but Texas has done very well for your investors and for your group. So I encourage anybody that is looking to get into multifamily to contact JC at Multifamily Group. And so that's great. So Todd Franks, we certainly do appreciate you coming on, spending some time with us. And JC Castillo, thanks for spending some time. I'm Paul Peebles. Have a great day.